Hey everybody, hope everyone's doing well and had a good day today. This is the Emini review for Tuesday, July 2nd, 2024. And look at the daily chart first. And I have the Globex, the ES. If we looked at the day only session, this is what the daily chart would look like. Either way, the market is in a tight trading range here. And my initial thought coming into the day is we had this bad buy signal bar, and if you're buying it, you're buying in the middle of a trading range. So I figured there'd be sellers above yesterday's high. But the problem with a bar like that is it's true, there's probably sellers above, but they may not come in until a measured move up. So maybe they're selling up here, and you can see that's the top of the trading range. Now, I like the Globex session. It's a little more information, less gaps. So you can see what happened today. It was an outside day, so we fell below the low of yesterday and then began to rally. So it's good to know that coming into the day. We can look at it on the 5-minute too. That's the day only, but if we look at Globex, maybe look at a higher time frame, like the 30-minute chart. Well, the point is, here's yesterday's low. You can see I had it drawn here, actually. Here's yesterday's low. The market dipped below it by only a little bit. This low, 55.04 and a half, and then 55.02.75. So by a couple ticks, we failed to break out. We did attempt to break out, but you can see 1, 2, 3 pushes down. And then coming into the day, here's 9:30, possible wedge bottom. And then the overall context, which we'll just look at the day only session for that. Coming into the day, the market's been in a trading range. And so like I said, the problem with selling directly above yesterday's high, which is this red line, is that the trading range high could be all the way over here. So if this is all a trading range, which I think it is, you look back, it's sideways. So it's very possible, the market's in a lower range here. It's very possible that we can test up here, and this is the top of the range. So always good to keep that in mind, because it seems illogical to have a trend day like we did today in a tight trading range like this, but it actually makes sense. And then for the 5-minute chart today, we had a big bull bar on bar 1. And I mentioned the Globex chart, but you don't even need the Globex chart to see a wedge on the open. 1, 2, 3 pushes down, big bull bar, closing near its high, bigger than all the bars to the left. Some traders will just buy the close of bar 1, betting it's a wedge bottom. Maybe you call it a wedge bull flag. Here's a bull trend, 3-legged pullback. And traders will buy, betting that maybe we'll test the close of 77 yesterday or the high of the day. Chances are we're going to test the high or the low of yesterday. Here's the low. And then bar 2, follow through buying, bull breakout, follow through. I say bull breakout, it's breakout bar, but because of the gap down, it's enough big down, big up, big confusion, and you look to the left, you can assume the market is in a trading range. So probably sellers above, but enough momentum, this is strong enough that it's probably a leg 1 breakout that will have at least a second leg. Probably buyers below bar 2, and probably going at least a little bit higher. Like I mentioned, 77 close is the target and the high of yesterday. Bar 58 close is also a target, but we did test that one on bar 78 yesterday. 3 rallied to the close of 77. So if you think about what happened, we have to go back into yesterday's chart just a little bit. Leg 2 trap up on 77, strong looking bull bar, but bad context. Bulls who bought here got trapped. So the minimum retest the bulls are looking for is a test of the close of bar 77. So bulls who are long scale in lower. We vacuum down, on this chart at least, gap down. We vacuum down to the bottom of a range. Maybe it's an expanding triangle. Always different ways to look at it. Maybe 3 pushes up, 3 pushes down, and then we're vacuuming up. And look where bar 3 tested. Just about the close of bar 77. It's no coincidence that we rallied there and then sold off. Bulls who bought here were disappointed. So on any retest, they're going to sell out of longs. So if bulls are selling, the market is going to stop going up. The bulls are not willing to buy up here. However, 3 consecutive bull bars on the open, strong enough up, there's probably buyers below. Bar 3 is a bad sell signal bar, so for that reason alone, there's probably buyers below. Inside bar on bar 4, market's going sideways for a couple of bars and in this tight trading range, but bar 4 is not a good sell signal bar either. Probably buyers below, scaling in lower. There might be sellers above, but this is so tight, the bears might wait for a second leg to the upside before looking to sell. Bar 5 fell below bars 3 and 4, and there were buyers below. We're expecting buyers below for at least a scalp, and the bulls could have made a scalp on this bar. The bar is 6 1/4 points tall. But bar 5 is a high one at the top of a trading range, so there's probably sellers above bar 5. The market's likely to go more sideways. We've had 3 consecutive dojis with a lot of overlap. And just look to the left. Bar 6 fell a little bit below bar 5 and then reversed up as well. Bad stop order below bar 5. It's a trading range bar after a rally. We fell below and then found buyers once again. 6, the same thing as 5. It's a bad high 1 signal bar, probably sellers above 6. Outside bar on 7, failed breakout to the downside, and then a breakout attempt to the upside. The bulls hoping we just rally to yesterday's high because that's a pretty obvious magnet. We're either going here or here. And of course at this point it's more likely we're going here. But bar 7, look at all the overlap. We see small bodies on this chart, but there's big tails. The market was rallying, pulling back, rallying, pulling back, selling off, pulling back. And that's a really tight trading range on a lower time frame. But we can see it here. It's just that we see the tails, which are failed breakouts. So then failed breakout on 7 to the downside, outside bar. It's an outside bar in a tight trading range, high in the range. So probably sellers above 7, even though it's a good looking bull bar. What about leg 1, pull back, leg 2? We have to go more sideways, and I don't know. This might be enough of a pullback, but it's really a high 1, and you're expecting the high 1 to fail, and for either a deeper correction or at least more sideways. Plus, bar 7 being an outside bar, it's an expanding triangle, and again, it's high in a trading range, so you're expecting sellers above. And then bar 8, we went to a new high of the day. Here was the prior high on bar 3. Tried to break out to a new high and then reversed. So what about selling below bar 8? Bar 8 is a pretty big bar, and selling on a stop order forces you to sell right in the middle of this tight trading range, which is not ideal. The bears are selling above bars. It's a limit order market, tight trading range. They're selling up here, or above 7, and then they're scalping out. So even though bar 8 is a strong bear bar, it's the first strong bear bar all day. And it's in the middle of a tight trading range. So you can expect disappointment, probably buyers below. But the buyers may not come in until lower. And that's what happened on bar 9. The market sold off but it's reacting to this bear channel line. On some smaller time frame, this is a wedge. There's 3, maybe 4 pushes down. You could even include the bar 3 low. It's paying attention to this support line. Bar 9, similar to bar 6, it's a bad high 2, weak signal bar, bad context, top of a tight trading range. Probably sellers above bar 9. The bull's hoping we have a rally, a 2-legged pullback, and then a second leg higher. I still think the bulls will get a second leg. I don't think this was the second leg. Bull breakout on bar 10. It's a bad stop order sell. There's buyers below bar 10. But buying above is not ideal. You have a tight trading range, and every time we rally to this area, we're selling off. Since yesterday, all in this area, it's a sell zone. So the bulls are having a hard time breaking out through this area. And then a bear trend bar breaking out below bar 10, but not closing below bar 10. So it could have been better for the bears. It's a lot of overlap, and bar 11 could easily be a second leg down. So this sell-off from bar 8, the bar 8 high to the bar 9 low, it's a pretty fair distance. 12.5 points. That's probably going to get some sort of reaction. You had bulls who bought up here, got trapped all the way down here. So any rally, the bulls are going to exit. That's what this bar is. That's what leads to a second leg. So here's leg 1, pullback, leg 2. Now we're getting a second leg down, testing support, this area where bulls have been buying. And it's a tight trading range. So you see something bullish and they sell it. You see something more bearish, they buy it. So with a bear bar, bar 11, it's more of a buy the close bar. You're expecting disappointment in trading ranges. Trend bars lead to profit taking. So in this case, a bear trend bar is likely to lead to profit taking from the bears. And traders bought the close with bar 11. Bar 12, we have a bull trend bar. Now, bar 11 was a bad stop order trade. So you had bears selling above bar 11, and bar 12 triggered their limit orders. But if you sold above bar 11, bar 12 is your entry bar, you're not thrilled with your entry bar. That's not what you want to see. So some bears might just exit their shorts here on the close of 12, maybe on a small pullback, and look to sell higher in the range. And then I believe that's what's happening on bar 13. The market's going a little higher. Consecutive bull bars, and I would say one being big and both closing near their highs, but bar 12 is not particularly big. The average range in here is about 6 or 7 points. So bar 12 was not a very special bar. But it is a breakout and follow through, and we'll probably go at least a little bit higher. This might be the start of the second leg for the bulls. Leg 1, trading range pullback, and then leg 2. It's also common for second legs to subdivide into smaller legs of themselves, so it's possible bar 9 was the start of the second leg for the bulls. We rallied, pulled back, rally again, maybe pull back, maybe rally again. Bull bar 14, it's a bad stop order trade for the bears. More buyers below, but they may not come in until maybe the bar 11 high, this breakout point. And for the bulls, not the ideal buy because it's high in a trading range and it's a possible wedge top. Market rallied 3 times to this price, and we have to see what will happen. And then we went outside down 15, so we tried to break out of this wedge top and then got bar 15. 15 reminds me of bar 8 for the bears, where it's a good-looking reversal bar closing on its low. And that is true. But it's following a 3-bar rally, and then if you're selling 15, you're forced to sell in the middle of this tight trading range. Plus, it's an outside bar, and we're expecting buyers below 14, scaling in lower. We're really just testing this breakout point. So it is possible that 15 is testing the bar 11 high, and then bears who got trapped on this breakout use 15 to exit shorts, and then we rally. and then we reversed up on 16. So 15 got no follow through. Remember, outside bars are expanding triangles. So if you're selling below 15, you're selling low in a trading range. Instead, traders bought below it, also testing that breakout point that I mentioned, bar 11 high. It's also important to notice that bar 15 did not close below the open of bar 11, so the bulls actually have an open gap here. It's very subtle, but it is important to recognize that gap. So I'm just going to draw that. 16, reversing up, but it's a high one at the top of a trading range where we have resistance. The market keeps failing at this line. We're so close to yesterday's high. I think we'll get there, but it's taking a lot for the bulls to get there. It's obviously might look like a wedge where we're getting 1, 2, 3 pushes up. The bear's looking for a sell setup. The bull's hoping we get the lower probability event. We get a bull breakout of the wedge top and then reset the market cycle. 17, a bull bar closing on its high. Bears who sold above 16, betting it's a bad high one at the top of a trading range. Similar to bar 12, not your ideal entry bar with 17. So some of them might exit, others might hold on and scale in higher. Getting a little busy on this chart. Just going to clean it up a little. 18, a disappointing bar for the bulls. The bears are hoping we get a bar 18 reversal. That doesn't necessarily mean that bar 18 remains the high of the day. It just means around bar 18. The market, 80-90% of the time, has seen either the high or the low of the day. So the bears were looking for a sell setup. The context is pretty good. We have possible wedge top, testing yesterday's high, overall trading range here. This is high in the range. Not that 18 is an ideal setup because it's a small signal bar, not particularly strong, after consecutive bull bars. So we're probably going a little higher, probably buyers below 18 for a scalp. But there's that risk that this is a wedge top, 1, 2, 3 pushes up, 2 legs up high in a trading range, 1 pull back, and then a nested 2 or 3 legs up here for the bulls. Plus, bar 1 remains the low of the day, only about 20% of the time. So that stat also helps the bear case today. But again, small signal bar 18. The odds are if we trigger the sell, we'll probably run the stops above bar 18. We came so close to the high of yesterday, we're probably going to get there. We triggered the sell below. The stop order sell below 18, limit order buy, bulls buy, betting that if we trigger the sell, we'll run the stop above bar 18. So that's the target for the bulls. The other target is the high of yesterday. I think this is also considered dueling lines where you have a wedge to resistance in this case. So we're getting maybe 3-4 pushes up to the same place we're testing the high of yesterday. So a couple reasons to expect resistance here. The bull's hoping it's minor and we get a pullback and then continue to rally. The bear's hoping for a major reversal. And then another bull bar on 20. So I'm going to make another, basically copy this and put it here because we had the same problem for the bears with bar 18 where we had a bull breakout 17, pullback 18, but 18 did not close below the open of 15. So that's 2 open gaps now for the bulls. 20, we ran the stop above 18. Bulls take profits. It's a bull channel. And again, traders will call it a wedge. It's a pretty decent shape, but my concern is the selling pressure because whenever you have a wedge and you're looking for a reversal, you want to see good pressure in the opposite direction. So in this case, you want good selling pressure. The bears have a couple of good bars, bar 8, bar 11, and 15, but there are 2 open gaps, and that's a problem for the bears. Another small signal bar, bad stop order, low probability, so probably buyers below for a scalp. 21 was an outside bar. We tested the hive yesterday on bar 21, and the market attempted to break out to the downside and failed. 21's a bad high 1, top of a trading range, 3, 4 pushes up at resistance, probably sellers above. 22, we went more sideways. The past 5 bars are very sideways. It's a tight trading range. It's also an expanding triangle. I have the upper line drawn, and then here, maybe 3 pushes down, 3 or 4, and then 3 or 4 up. The market's in breakout mode. Buyers below, sellers above. And then outside up. So the expanding triangle failed to break out to the downside, and then attempting to break out to the upside. 23 is the same problem that the bears had with bar 15 or 21. These are outside bars in trading ranges. There's probably sellers above 23. What the bulls are hoping for is we have a breakout above yesterday's high and then follow through. But we only broke out by maybe 2 ticks. The high is 55.39.5. And the close, by 2 ticks, 55.40. So we closed 2 ticks above yesterday's high. It could be a lot better than that. It's a really small breakout, but it is a breakout and it closed above. But probably sellers above 23. Inside bar 24, we went sideways. The bulls prevented a bear bar, so that's the bare minimum follow through. Sellers above 24, probably buyers below, not a good stop order sell. The bears hoping that this is a wedge top. They're not getting what they need, which is better selling pressure, more overlap in here. And where's the good signal bar? 25 rallied and then pulled back. So we rallied how many points? About 4 points above bar 24. It's about 4 points above the hive yesterday. So this rally might have been strong enough that there were buyers below for a second leg. And 25 is not a good stop order sell signal bar. It's a trading range bar. And not enough selling pressure in here. So probably buyers below 25 for a second leg. And then we went outside, almost outside up. We triggered below 25 on 26 and then rallied. Bull trend bar, but think about what happened. We rallied on 23, paused, rallied on 25, pulled back, rallied on 26. That's 3 pushes up. And in this case, the shape isn't great, and you can call it a truncated wedge, which is where the third push does not exceed the second one. And again, the shape is pretty hard to see, but it is 3 pushes up. So you might have more sellers on the close of 26. Bears selling for a scalp, bulls taking profits. Then we rallied, actually completed the wedge. It's not a truncated wedge, so 3 pushes up, where the second push was overshooting the channel line. What about selling below 27, betting this is the wedge top? And then you could argue even over here. Sorry about that. I have snap mode. So something like that, maybe 1, 2, 3. Sure, you can argue that. But again, I'm keeping these here to remind you that there are open gaps, because that's concerning. As sideways as it looks, it's actually kind of sneaky for the bulls. It's like a sneaky sign of strength. There's actually another gap that I didn't even highlight, and that is here. We broke out. You could argue these bars, but even these doji bars did not close this gap. And right now, here's a bear bar. So now we have 3 open gaps. That is a problem for the bears. And what you have to remind yourself is what the higher time frame charts look like. This entire rally, it's a spike in channel, bull trend, but the channel up is pretty tight and there's open gaps. So as far as selling, it's hard to sell a tight bull channel. It has that wedge shape, and the context makes sense. But remember what I mentioned at the beginning of the video, where we're in a tight trading range on the daily chart, and there's probably sellers above yesterday's high, but I mentioned they may not come in until a measured move up higher in the trading range. The trading range is pretty wide on the 5-minute chart, and so we could get a trend day today. And these open gaps is a warning that, what do we know right now? The highest probability for today is probably a bull trading range day. Second highest probability, probably a bull trend day. And then third, maybe a bear reversal day. The lowest probability is a bear trend day. And so that should influence your thinking process and your decision making. Bear trend is at the back of your mind. Bear reversal, really at the back of your mind. Right now you're thinking the market's probably going higher. But yes, this is a tight bull channel with a good amount of overlap, but there are open gaps. And the market might pull back and test breakout points. But even if it does, the best case scenario for the bears here is a trading range. So what about selling below 27? Well, you're selling a tight bull channel, but there is an argument to be made. 3 pushes up, and then a nested 3 pushes up here, and a good sell signal bar, micro double top. Doji 28, bad buy signal bar, sellers above, might be sellers on the close. Inside bar 29, so going sideways for maybe 4 or 5 bars. It's a possible final flag. Final flags are often triangles, and that's what we have here, a triangle. The market's contracting, and we've had a lot of buy climaxes with bad follow-through. Buy climax, big outside bar, buy climax, sideways, again sideways to down. And so at some point, the market's going to correct. And this triangle is a possible final flag. And we had that bear breakout on 30. It's a good bear bar. It's closing near its low. It closed below the moving average, so it crossed over the moving average. And we have a micro channel since bar 27. That's 4 consecutive bars with highs starting here, these highs at or below the prior bar's high. Bar 30 is strong enough to expect the market to go at least a little bit lower, but remember the context. Bar 30 is finally closing this gap. You had bears trapped here, and those bears will probably use a sell-off to exit their losing short positions to buy back shorts. So there's probably buyers in here, buyers below 23, buyers below 16, buyers below 12, all the way down. 31, minimum follow through for the bears. It's a doji bar and a bear close, but bar 31 could not close below bar 30. So this could be stronger for the bears, but it's a bad stop order buy above 31, probably sellers above. Inside bar 32. So if you judge this bear breakout, you have a big bar, well, small bar, big bar, small bars, inside bar, and then big tail, overlap. It's really not the best looking breakout you've ever seen. It's strong enough that you would expect a second leg down, but it's probably it is a minor reversal. And then 33, it's a bar similar to 31, bad stop order, buy signal bar. But the problem for the bears is that we're selling off, pulling back, selling off, pulling back. You can even argue somewhere over here that might be an expanding triangle or a wedge, some sort of 3 pushes down. Still strong enough to expect a second leg down. Bull bar 34, closing on its high. Some bears will exit above that bar, look to sell higher. Maybe the top of the trading range is up here. 34 is a bad stop order sell. There's probably buyers below 34. Inside bar 35, small bear bar, testing the high of 33. Remember, 33 was not a good stop order buy setup. Then we got a bull bar closing on its high, 34. So some bears got trapped selling above 33, and they used 35 to exit. That right there, as crazy as it sounds, that is the minimum second leg down for the bears. Leg 1, pullback, leg 2. Bears disappointed buying back shorts, and that's what happened on 36. Big bull bar, well, it's a little bit of a surprise. Crossing over the moving average, this is not ideal after seeing a bear breakout. You don't want to see bars like a bull bar closing on its high, a big bull trend bar, 36. 36 is a big enough bar to expect more to the upside. So it might get a minor reversal and then go a little higher before bears are willing to sell. Sideways, 37. It makes sense. You have bulls buying lower, scalping out. You got a trend bar in the middle of a trading range. It's also probably around a 50% pullback. I'll make the 50% level red. So that's right here. We're around there. Makes sense that there's resistance there, but 36, again, it was stronger than bears would have liked. Sideways on 37, probably sellers above, buyers below. 38, testing a little lower. Same thing happened on 35 as 33. Bears sold above 35, bad stop order, signal bar, and then they got trapped. Bears selling above 35 here, got trapped. They're using any pullback they can get to exit. They're losing shorts. Look at the high of this bar. The high of 35 is 35. And then the low of 38 is 35. So we got a perfect test, perfect breakout test. The bull's looking for bull breakout, breakout pullback, and then second leg. 39. Micro level bottom, same low. The bears unable to close the gap. They tested it, but they had to be really quick, and because limit orders, the market usually has to go one tick beyond your limit order to fill it. So if you sold above 35 and then had a buy order to buy back your short there, you may not have been triggered or filled on either of these bars, and that can cause a sense of urgency and maybe a feeling of panic for bears. And 40 might be like a small version of a give up bar. 40 makes sense. We're expecting a second leg after this. Because of this, we tested it. We're getting buyers. The bears looking for a sell setup, maybe a low 3, bear breakout, 1, 2, 3. But now they need a signal bar. Bull reversal bar. It's a doji, but not a good signal bar for the bears. Probably buyers below. 4 bar micro channel. And then a 5 bar micro channel with 42. Another bad stop order signal bar for the bears. Probably buyers below. You think about this bear breakout. You think about the breakout itself. Wasn't very strong. And then look at the follow through. You're not getting a brief pullback and then a second leg. It's actually getting pretty deep. We know that 50% is around here. We're pulling back more than 50%. So this is not a strong bear breakout. 43. Bull trend bar. Now maybe a 6 bar micro channel. This is what leads to give up bars. You have bears who they might have been holding short. Doesn't matter where they sold, expecting a second leg. But now we're getting an endless pullback. We're getting 5 consecutive bull bars. A lot of them closing on or near their highs. So 43. Also, this was a triangle. The apex of a triangle, usually a magnet. You get a breakout, and then it fails, and we come back and test it. And we got that surprise bar. 44. Bull breakout and follow through. 43, 44. Really strong follow through bar, closing above all the bars to the left. You can argue that it's a late leg, maybe leg 1, leg 2, but you can also argue that the market's in breakout mode. It's an overall trading range, and we're getting a new bull breakout. So some traders do this as leg one, and it is a strong breakout. The problem with it is that it's only breaking out by a couple ticks above the high of the day. The bulls need to do more. And then they get follow through 45. We have a tick gap going into 45. We know that 45 is a weak stop order sell, and it's still a micro channel. It's about 8 bars without a bar, trading below the low of the prior bar. So we probably have more buyers below 45 for a couple of reasons. Breakout point, 27 high, probably test there as well. 46, the micro channel continues, bad stop order below 46. Getting a lot of bull bars. This has been a common theme for the bears all day, lack of selling pressure. And then open gaps here again, so I can draw these over here. It's the same idea. Bears don't close the gap once over here, don't close the gap twice over here, and then really a third time above this bear bar. Inside bar 47. Trading range going sideways. It's a small spike in channel pattern. We'll probably come back and test the start of the channel, the low of bar 45, and expect buyers there, plus buyers at the 27 high, breakout point. 48 getting a bear breakout, but really only breaking out below the inside bar. We're still within the bar that the inside bar was within. There's probably buyers below 46. 48, the bears have to do more. It's a small trend bar, but more of a trading range bar because of the context, even though it's mostly body and small tails. Do you really want to sell below 48? Is 48 going to undo all of this damage by the bulls? I don't know, probably not. It's not really, I don't have a sense of urgency to get short here. And then we fell below 45, found buyers below. Completing the market cycle, we have a trading range. Trading range bar, 49, probably sellers above, buyers below. But there are sellers above for a scalp. And if you are selling above, you have to remember the open gaps. You have bears trapped into losing shorts, hoping for any pullback. This is an open gap. And then you can also argue this is the gap. Either way, there's pretty big open gaps with bears trapped into losing shorts. So this breakout should lead to a second leg up. Outside bar 50, we went a little bit lower, maybe 1, 2, 3, high 3 on a smaller time frame. The buy setup is somewhere down here. You could also just enter with a limit order below 49. Testing the breakout point, 27 high, tried to break out below it and then reversed up. You can argue 50 is high in a trading range. It's a high in a trading range, but the context makes sense for the bulls. This might be a bull trend. We have open gaps, lots of bull bars accumulating above the moving average. And at this point, it looks like bar 1 will remain the low of the day, and all we've been getting all day is higher lows and higher highs. $51, bulls taking profits at new highs. That's what bulls do in the channel phase. They buy below bars and sell above bars. Bears will sell above bars for scalps, but it's extremely aggressive in this context where there's not much selling pressure. So 51, you can call it a double top with 46, 46, but weak signal bar 51, only one bear bar in I don't even know how many bars, at least 10 since here, and these bear bars are weak. So probably buyers below 51, minor reversal. We didn't even trigger below it, instead we're going higher. Traders bought the close. We have a tick gap from the close of 51 to the open of 52. 52, there are probably buyers below 52. It's a bad stop order sell, and you can argue it's a bull trend. And it's okay to be long at the high of a bull trend. Bull breakout 53. Breakouts like 53 will attract profit taking, but they're not so climactic, and the context isn't that you expect a major reversal after 53. So you expect 1 to 3 bars sideways after 53 from bulls taking profits. But bears, if you're selling 53, it's really aggressive. And then 54, we went a little higher, but we went sideways. It's a trading range bar. Low 1, sell signal bar below 54, but micro channel since 50, probably buyers below. This is strong enough of a breakout to get a second leg. 55 going even higher, the micro channel continuing, but now we rallied on 54, pulled back, rallied on 55. Might be 2 legs up on a smaller time frame chart, it might be sellers above. Sideways, 56, but still nothing to sell. This is a very tight channel. So it's okay to hold long. I should have mentioned, and I'm trying to get better at this, I always forget to mention always in long. I thought it was probably always in long on the close of 44 consecutive bull bars, one being big, both closing on their highs. Plus it's breaking out above all the bars to the left. This became always in long. You can buy the close of 44. And then it's still always in long here. So the market's going higher, the market's always searching for a fair price. And if it's not a fair price, it's going to let you know. It's going to rally or it's going to sell off. In this case, we're rallying. The fair price is something like this. The market goes sideways, the bulls and bears initiating trades, both the bulls and the bears entering, but here the bears are not selling. There's hardly any selling pressure. It's a tight bull channel, so only look to buy. Buyers below 57. 58 triggered below 57, but buyers below. But we're getting far above the moving average. And to be fair, for the bulls, this is pretty orderly. It's actually a pretty good small pullback trend. The price is rising in a manner that's pretty parallel to the moving average. So I wouldn't call it parabolic, but it is 3 pushes up, 53, pause, 55, pause, 57. You get a bear bar closing below its midpoint. It's okay to exit below, but it's still always in long, so you have to enter again above a bull bar closing above its midpoint. But it's not the craziest thing to take profits below 58 or above 58. 58 is a high 1 signal bar with a bear bar, bad signal bar. 59 triggered the high 1, but the high 1 is now late in the trend, whether it's from the bar 1, start of the day, maybe it's 2 legs up here. But it's a bull bar closing on its high in a tight bull channel. So it's aggressive to sell above it. But bulls, this is a channel phase. It's very tight. It's actually a breakout on a higher time frame. You can even call it a breakout on this time frame. It is a micro channel. But it's, again, possibly a late one, maybe 1, 2, 3. Bulls will take profits above 57. And then 60, we rallied above 57. Bulls took profits. What about selling below 60? I think you can sell to exit longs below 60. It's a micro double top. You're getting far above the moving average. Late in a rally, or at least 20 bars into this trend. But I would not sell below 60 to initiate a short. It's only a trading range bar. We haven't had a trend line break. So you're selling in a tight bull channel, which is basically asking to lose money. There's buyers below 60, scaling in lower. 61, bear, trend bar, but only breaking out below 60. There's still buyers below 59 and scaling in lower. If we do happen to sell off to the moving average, there are buyers there. Been above the moving average for 20 bars. That's a 20 gap bar buy setup. Traders are willing to buy above the average price for over 20 bars. So if we get back to the average price, the bulls will be happy to buy at the average price. Probably sellers above 61. Going sideways for 5 bars might be a tight trading range, but more likely a bull flag. We rallied on 62, found sellers above. It is a tight trading range. Bulls taking profits above bars and buying below. Bears might start to sell above bars, but they're scalping. And it's really dangerous to do that when there's lots of open gaps in a tight bull channel. Buyers below 62. 63 tested the low of 62 and then rallied. Obviously a really tight trading range here. 63, you can argue it's a high too, but in a tight trading range, high in the range, but it's also a high too in a bull trend, and you can buy the high of the day when it's a high too in a bull trend. 64, bull breakout, but possible 3 legs up. Maybe we get a minor reversal. I say minor because this is more of a trend continuation pattern. The market's pulling back, but it's literally going up as it's pulling back. We're getting higher lows. So this is really not ideal for the bears. Probably buyers below 64. Going a little higher on 65. The bears desperately hoping for three breakout attempts that fail, and then we pull back. Think about the bears who were short down here who did not get out. They're experiencing a lot of pain. They're hoping for any pullback to exit their shorts, but they're not getting it. Probably buyers below 65. Outside bar 66, but it's an outside bar in a bull trend, a strong bull trend. So expanding triangle, it's a trading range bar. There's buyers below 66, scaling in lower, like below 63, and even lower. 67, a doji. So for the bears, disappointing. Bear breakout bar, but then sideways. Overall, trading range, probably a bull flag. The market's been sideways for about 10 bars. When it gets to 20 bars, that's when Al will consider it about 50-50 for breakout direction. But for now, there's still a bull breakout bias. This is still more likely a bull flag. Inside bar 68. You can call it 2 legs down. We sold off, paused, sold off again. Now we're getting a reversal low in the trading range, which is a bull flag. Probably buyers below 68. Maybe the bears get a second leg, but it's minor. Then instead 69 rallied. There's a small second leg. It's very hard to see, but the market sold off down to 67, pulled back to the high of 68, sold off to the low of 69, and then rallied again. And it's a minimum second leg. The close of 67 is 55 and a quarter, and the low of this bar 55 and a quarter. The bears got that test and they took it, and everybody bought. Consecutive bull bars, 69 closing on its high, probably going higher, still a bull trend. Buyers below, bad stop order sell. There's that second leg for the bears, 1, 2, probably buyers. Well, obviously buyers below 69, but the bears will probably be unwilling to sell until the market goes higher. 71, a small bull bar, not climactic. That's good for the bulls, but it's really a small bar. The market's been going sideways for close to 20 bars now. And eventually we'll probably test the moving average, but still nothing to sell. 72, another bull breakout, testing the channel line. The market's paying attention to this price, so bulls are taking profits anytime we get near this red line. So there might be sellers above 72, bulls taking profits, but I would not sell to initiate a short. A little bit higher on 73, pulled back. We tested the channel line, and then there were sellers. This is a bad stop order sell below 73. It's a big bar, relatively big bar, so big risk. It's a bull bar, and it's a 4-bar micro channel. Inside bar 74, but probably buyers below, scaling it lower. And then we triggered the sell and immediately reversed up on 75. But 75, the bulls may have been disappointed here. It's not a major disappointment. It's very clear that the bears aren't getting much of anything. There's another open gap. So you might have bears actually looking to give up above a bar like 75. But instead we have an outside bar, 76. Market's going more sideways, clearly in a channel. Probably buyers below. The outside bar, it's an expanding triangle in a bull channel. And then you can see outside up. breaking out above the channel line, low probability. Bulls will take 77 as a gift to exit their longs at a great price. We tested the moving average, although I'm not sure we actually touched it when we got near it. Maybe we got near it, and then the price rallying pulled it up higher. And then 78 consecutive big bull bars. That's a gift for the bulls. Low probability breakout, probably an exhaustion gap, which means we're more likely to come back down and test the low of bar 78 or even the low of bar 77. More likely to go down here than all the way up here. So bulls will take profits, aggressive bears will sell, seeing that it's late in a trend, and then a big exhaustion gap. It's also important to realize where we are. We scroll back. Here's a lower high from the 28th of June. Then we look at where we are breaking out of here. There's that price. So we have one breakout bar above that price. That's good for the bulls. But the bulls still need follow through. And if this is an exhaustion gap or a possible exhaustion gap, breakout of a bull channel late in a bull trend, bears will sell, bulls will take profits. That's what happened on 79. Big bear bar, probably going a little lower, but big up, big down, big confusion. There could easily be traders buying the close of 79 for a scalp, probably sellers at the 78 close. And then went a little lower on bar 80, testing the channel line again, but so late in the day, big up, big down, going sideways, expecting more sideways. And then 81, an outside bar. For always in today, maybe always in long on bar 2, consecutive bull bars, but it's probably not ideal because they're below the moving average in the middle of a trading range. So not ideal, always in long there. But we never went always in short, clearly. I don't know, maybe here, 30-31, it's always in short. But again, the context isn't bad. You look to the left, and there's buyers below swing points. And then that was more clearly always in long, 43, 44. And then we didn't look back. And so it's okay to hold long all through here. And then if you're trading always in, this is a minor reversal. You don't exit below it. If you're swing trading, you get out below 79. You can't exit on 78. 78 is a bar that shakes swing traders out. It's a gift. So swing trading bulls will take profits on that bar. Stop orders today. All through here, really not ideal for stop order trading. It's more of a limit order market. You can argue it's 2 legs down, a high 2, but it's a bad signal bar. And even the rally isn't that great, but you are expecting a second leg. So you can make an argument for buying above one of these bars here. But I think the best stop order trade in all of this is above bar 12. And then traders might take a chance selling below 27. But at this point, more of a minor reversal, low probability. Bull bar closing on its high. After this many bear bars, not ideal to buy above 34. And so we rally on 36. Everybody's trapped. Bears are trapped in. Bulls are trapped out. We retest it. Now you can buy above bar 40 or any of these bars here. Even here, buy the close, buy above. It's always in long. You can buy above any bull bar all the way up. Not ideal here where the market rallied and pulled back. You're buying in a resistance area. It's still okay, but your stop is somewhere down here. And then maybe a high 3. 1, 2, 3. You buy above a bull bar. 68, 69, 70. And that's it for stop orders. For limit order trades today, 3 bar rally, really 4 bars up. and a bad low probability sell below 4, buyers below. High 1, but high in a trading range on bar 6, sellers above. Outside bar 7, sellers above, buyers below. We went below on bar 9, there were buyers below. Probably sellers above 9, it's a bad stop order trade. We triggered, bears made a scalp. Probably sellers above 11, but bad entry bar 12, the bears gave up. There's a limit order trade here, the limit order buy for the bulls testing this breakout point. You get filled on 15 or 16 for a second leg up. 18, bad or minor reversal, small signal bar with yesterday's high magnet so close you can buy below 18. And then another bad stop order below 20. I don't know if we rallied above 20 first or if we rallied or we sold off below 20 first. But if we sold off first, you can buy below 20 for a scalp, but really not ideal. Might be 2 or 3 legs up to resistance. And then minor reversal here. There were buyers below 22, maybe a 50% pullback of this rally. You're expecting a second leg after this. And then bad high 1, 24, sellers above, but bad entry bar. You're lucky to get out, break even. The bears who sold got out. That's what rallied. That's what caused the rally on 26. But then here, it's possibly high in a trading range. 3 pushes up. You had sellers above 26 for a scalp. We happen to get it's a bigger minor reversal, but it's still minor. Probably sellers above 33 or 31, 50% pullback. Here's 50%. But if you sold above this bar, you're disappointed. You get out. You sold the 50% pullback. 36 is your entry bar. Not ideal. You might get out. Plus this open gap. And then all through here, all you're looking to do for limit order trading is buy a pullback. You buy below bars. You can buy below any bar. And if you buy below any bar in here, scaling lower, below bars, you will do just fine. And then where do we go tomorrow? We had a trend day today, and it was a pretty strong small pullback trend, but because of the context, we're in a tight trading range on the daily chart, probably sellers above the high of today, and more likely we get sideways to down trading within the first 2 hours of yesterday. I'm expecting maybe a test higher in the range, maybe even a breakout above, but then disappointment. There's too much sideways trading. The bulls are taking profits above bars, and they're looking to buy low. And right now the market's not very low in this range, so aggressive bears will start selling. As always, please feel free to leave questions in the comments and include timestamps for any question specific to this video. And with that, I hope everyone has a good rest of their night. Thanks for watching.